Hello, everybody. Welcome to this webinar brought to you by Bursa Malaysia Derivatives and managed by our company LifeChamp. So today, our webinar title is Trading Futures for a Living. Critical lessons you need to know to get started. So welcome everybody to this session. My name is Shen Chu. I'm the moderator for this session. Now, I guess that the reason you're here because you want to explore how can you pick up trading futures full-time for a living. So today, we are going to explore what are things that you need to know, what are lessons that you must learn, and what are critical aspects that you must get it ready before you can embark on a full-time trading as a career. So that's what we are going to do today. But before we begin, disclaimer. Whatever we share in this session is only for educational purpose. So in no way that we give any recommendation for you to buy or sell any listed securities or derivatives that we covered. So if you decide to make any investment decisions, you're 100% responsible for all your investment and trading risks. Now today, we have invited a heavyweight speaker. Okay, he is none other than Mr. David Loh. So David is currently a full-time trader and managing partner of Xmodeus Trading Group PLT, a consultancy specializing in providing bespoke trading strategies and coaching for private and corporate clients in the equity commodity derivative markets. He has 24 years of experience in the Malaysian listed derivative industry, having held leadership positions in futures broking divisions of major investment banks in Malaysia. He is also the past president of the Malaysian Futures Brokers Association from 2018 to 2019. Since 2000, he has spoken in hundreds of seminars and workshops to over 4,000 retail traders on trading Bursa Malaysia Derivatives, as well as foreign futures markets. This includes live market trading sessions and webinars. He has also been a trainer of licensed brokers for the continuing professional education program courses of the Securities Industry Development Corporation. David has been an invited panel speaker at international palm oil industry events such as POC 2019 and POTS India 2019. So David, welcome to this webinar.
Thank you, Shane. It's a pleasure and honor.
Yeah, glad to have you here again. So I'll hand over the session to you. Can't wait to hear from you.
Okay, thank you, Shane. Let me just share my screen and make sure that everybody is on the same screen as me. Share screen. All right. How's that looking, Shane? Are we good?
Yes, we are good.
Okay, thank you, and good evening to everyone joining us today on this session, Trading Futures for a Living. Okay, so it must have been a very exciting last couple of days for most of us in Malaysia. Okay, there's the World Cup that just came on live, and of course we had election results as well. So everybody's like glued to the TV screens, watching those elections and also the World Cup. Okay, so for those of you who join us tonight, I guess away from the World Cup and the election, you have come to spend some time at this session. You must be the real serious traders, okay? Because this chapter or this particular session on trading is for those serious traders, the traders who are looking to trade futures for a living. And congratulations if you are one of those people seriously thinking to trade futures for a living. So what I'm going to cover tonight is to talk about the various aspects of trading futures for a living, okay? And I do that on a daily basis, right? I trade futures for a living, okay? And share with you some ideas and some experiences as well going through trading futures for a living, right? And what are the critical lessons that you need to know before you actually get started and go full swing in trading for a living. All right, so let's move on. Okay, disclaimer is covered, speaker profile is covered. Okay, this is what we're gonna cover tonight. All right, so what you will learn first, we'll talk about the hype. Okay, the hype and the reality, the difference, okay, between hype and reality in terms of trading as a profession. Okay, trading for a living. Okay, so we'll talk about the various aspects. Okay, a lot of people get very different expectations when they come to trading. Okay, they have some wildly and very wide different beliefs as well when it comes to trading. So in this first session, I will try to dispel some of those hype and give you the reality of trading. Okay, and hopefully you'll be more grounded after the first part of this session. Then we'll go in and talk about the various aspects of trading, talking about the mindset, talking about the methodology, things you need to watch out for, talking about a very, very important aspect of trading, which is capital. Okay, and capital always relates itself also to risk. Okay, and exposure in the market. So we'll cover some of those very critical aspects of capital and risk. Okay, and then we will talk about if you want to be a professional trader. Okay, what are the setups like? What are the trading platforms? What do you need to have? Your brokerage accounts. Okay, and then we'll talk about various other careers in trading available either on the BMD, Bursa Malaysia Derivatives, and also talk a bit about proprietary trading as a career. Right, so let's get onto it. Okay, the hype of trading. Okay, I think you've seen this on the internet. Okay, anybody who've been trading or even Google the keyword trading, okay, for a living or trading, you will find yourself inundated with a lot of videos, right? You have irritating videos come up sometimes on YouTube, you know, halfway through you're looking at a video and then one guy comes out and shout about his trading system and all that, right? There's a lot of hype, okay, and a lot of promises, okay? Some people will promise you that, you know, you're able to sack your boss and trade full-time in like what, 30 days, okay? Talk about millions of dollars can be made in just investing a few hours per day in trading. Okay, some say they have the insiders' secrets to making it big in trading. Okay, but then they are selling that as an ebook. Okay, and some of them promise you actually to make you become a day trader instantly. Right, so. All these promises, are they actually real or not? Okay, so this is something that I want to dispel, okay? Because if you really go into trading, and some of you have gone into trading, okay? Some of you probably have gone into trading quite seriously, you will realize that reality and the hype that people say about trading, it's very, very different, right? Yeah, so we're gonna cover that aspect, okay? And it's very important if you don't understand, okay? Then it can actually be very, very costly, okay? And be so costly as to even can cost you your life, okay? And this is a lesson I think a lot of people don't realize, okay? When they first come out, if you don't know what you don't know, it can actually kill you, and it actually happened. And this is in year 2020. Some of you know this case, okay, of Alex Kearns, okay? Alex Kearns was a 20-year-old trader, okay? So in the year 2020, because of the lockdowns and all that, right? And a lot of people in Malaysia as well became day traders in the year 2020, right? And markets were really quite volatile and quite good to trade, right? And Alex Kearns basically went into trading. 20-year-old guy in college, you know, wanted to make some money, okay? And then he got on into the Robinhood app, okay, and started trading equities. And also he was approved to trade options, okay? So he went into options. He found a strategy that, you know, he could buy options here and sell options on the other side, and then he traded, okay? And then one of those days he found out that, hey, his what do you call that? His statement was looking that he lost $730,000 in an options, stock options strategy, right? So he was frantically calling, the guys, the help desk at Robinhood, and he couldn't get them, and tried to get help and see what's happening, okay? And then there was a call for the payments for 100,000 in 3 days' times. And I think he couldn't take it. He was so shocked that he did such a big mistake in trading, okay? And basically he sadly took his own life, right? This is a very, very sad story, okay? Basically at the end of the 3 days, when the sad irony of it is after the 3 days, and when the support came back to him, basically told him that you are okay, you didn't owe us that money. Okay, by that time he lost his life already. Okay, and together with his suicide note, he actually print screen his particular screen of deficit of the 730,000 plus a note to say that he basically did not know what he was doing. Okay, that's a very, very sad case. But if you don't know what you're doing, okay, it can actually kill you, right? And if not for a huge financial loss, okay. And a lot of people, I think, in 2020 went into the stock market as well. Okay, for a long time, we haven't seen a lot of these volumes even in Bursa Malaysia. Okay, and of course, markets become very volatile. The futures market, you look at oil, you look at crude palm oil. Some of you are in the market that time as well. It was so volatile, right? So if you are able to survive those times, okay, then and come up okay, I think you've got something going for your trading, okay? But if you really don't know what you're doing, I guess this session is very, very important for you as well, right? So be very careful, okay? What you really don't know can actually be very devastating or disastrous, okay? So in terms of the reality of trading is, if you talk about consistent, successful trading, is actually a process, right? A process of developing and executing a winning strategy, okay? And a winning strategy will comprise three things, okay? Basically, you need to have a good methodology, okay? And this methodology, and later I will really emphasize this methodology needs to have an edge, okay? So the question is, how do you know your trading system has an edge, okay? So if you go into the market in 2020 and you bought a certain sector of stocks if you were in the rubber glove sector, you were taught that you were a fantastic trader, right? Because market continued to go up, right? And you will finally realize after a year after that then your skill will have come up short, okay? Because in a market that's raging, okay, any guy that goes in can actually make money, okay? But how to differentiate between luck, okay, and your right time in the market, and how do you differentiate between skill and knowledge? That is very, very important, okay? So you need to have a trading methodology edge, and you need to have a very robust money management system. You need to how to manage the risks, okay? And of course, lastly, you need to have the correct mindset and trading psychology, right? These are very important critical ingredients of developing a good trading strategy. Knowledge, skills, work, and dedication. These are very, very important, characteristics, okay? So to become successful in trading is not unlike becoming successful in any other business or profession, okay? So if you expect to be good and to be fighting with the top percentile of traders in 1 or 2 months of trading, then you got to check. You have to have a reality check, okay? Because like any other business, in order to be good, you need the knowledge, and you need the dedication, and you need the skills, right? So to learn the lessons, of course, learn lessons, of course, from successful traders and professional traders. That's one of the key things, right? One of the shortcuts to learn how to trade better is learn from successful traders and learn from professionals. Okay, and one of the things, this is, of course, a man that you will definitely recognize, okay, Warren Buffett. And one of his quotes is that he always, and I always remember this as when I learned trading, right? Basically, he says that it's good to learn from your mistakes, okay? But it's better to learn from other people's mistakes, okay? So in terms of making mistakes in the market, okay, always when you make mistakes in the market, it's actually quite expensive, right? Because basically you're losing money, right? So try to learn from people's mistakes first, okay? So I want to share with you in the next 2 slides quickly. I don't spend too much time there. Quickly run through what are the mistakes that most people make in trading, okay? So you learn from them and try not to commit those mistakes, all right? So why 90% of people lose money, right? The first is not knowing the difference between long-term investing and trading, okay? So a lot of people who are in investments, okay, they do long-term investments. When they come into short-term trading or shorter-term trading, they find it very, very difficult or very, very different in terms of investing and trading, okay? Trading is very different. We are more short in terms of our time horizon, whereas long-term investing is, talking about investing for 2 years, 3 years, 5 years down the road, okay? And in terms of investing, your investment returns, you're talking about 10 to 15 annually is very good, okay? But when you're a trader, you're not looking at 10 to 15% per year, right? You're basically looking more than that. Probably you're looking in the horizon of 10 to 15% a month, right? So different types of methods in terms of putting money at risk will require you to have different skills, right? So if you think that you have skills in long-term investing, it may not be able to transfer into short-term trading because that's a very different animal, right? That's number one. Number two is underestimating risk and leverage. And especially if you're trading futures, okay, or derivatives or any leverage product, okay? So if you underestimate the effect of leverage, or you don't understand how that works against you, especially, right, you will get hurt. Okay, so this is basically a money management and risk management issue, right? And the third is a very important one, and that's where a lot of people, when they did well in year 2020 and going to 2021, did really that badly, is because the deception that trading is so simple, right? They go in, wow, they make money so easy. So they feel that trading is so simple and nothing online, just put your money in, put in a good stock and it will rise, okay? But not always, right? And they realize that, okay? That's very deceptive. Trading is very deceptive because it's very easy to start, right? Open an account, okay, press a buy or sell button and you're in already, you're trading already, right? So it makes the entry to it, or the barriers to entry to trading is almost non-existent, right? Non-existent. You just need to have the money, right? And everybody will give you a platform, okay? But doesn't mean that initially feels so simple that it's actually that simple. Okay, and it goes down to actually the next point. You don't have training before you're trading. Okay, you don't study enough about training, or you never attended some training to get to know how to trade. That's one of those things that flows from point number 3. Right. The fifth thing that I will talk about later is starting off undercapitalized. Right, you don't have enough capital for trading. Okay, that has a very big impact on your trading psychology. Right, so we'll talk about that. Using money that isn't truly risk capital. Again, very simple compared to the undercapitalization. This also become a trading psychology issue. Okay, you're basically trading money that you cannot afford to lose. Okay, that's a very, very serious problem. You cannot solve a problem, a trading psychology problem, if it's money that you cannot afford to lose. Okay, the other thing is overconfidence. Okay, beginner's mistake. A lot of people in year 2020, they had that. Wow, so easy to make money in this market, right? Beginner's mistake. They thought it's trading so easy, right? Now, 8 is an ego problem, wanted to be right instead of making money, okay? Focusing on wanting to be right, okay? The more you stronger your view you have on the market, okay? The more dangerous this particular problem becomes, okay? Number 9, a lot of people do that in the stock market, okay? OPO, what's OPO? Other people's opinion, okay? They don't do their own research. They don't do their own study. They don't have a methodology. They only listen to news, rumors, okay? And these days, social media, okay, what's hot news and all that, they just follow. And they think trading can be as easy as that, okay? So when you're following the herd, basically, the herd usually gets slaughtered, right? Then trading for excitement, which is really the wrong reason, okay? You must treat it like a business. Okay, don't trade for excitement. Okay, trading can be exciting, but don't trade for excitement. Okay, do other things for your excitement. Okay, number 11 of lack of money management is a key important factor critical in trading success. No methodology. Okay, simply tembak. In Malaysia, we call it simply tembak. Okay, having trading rules. Maybe you have some trading rules, but you don't follow them. Also, no point. Okay, can't or won't follow. Okay, having unrealistic expectation for trading returns. Okay, this especially is based on your experience. You need to understand where your skills and experience are. Okay, because to be consistently profitable in trading in terms of also generating returns, it's correlated to your trading ability and experience. Of course, market makes a difference as well. Okay, if markets are volatile, then the return tends to be better. But okay, if you have a more volatile market, but the risk also increases, right? So you need to basically correlate your returns with the experience that you have. Right, 15, over trading. Right, some people because they've lost money, they will have even bigger position sizes going to market, trying to make the money back. Okay, so this is a money management issue, okay? Basically position sizing issue, right? 16, lack of discipline is a trading psychology issue. Lack of patience, okay? Seeing trading as a hobby, okay? So a hobby, I think, I won't recommend trading as a hobby. It's a very expensive hobby. If you want trading as a hobby, you need to treat it as a business, okay? Trading without a plan goes, of course, to say that's not going to be happening or not going to give you results in the long term. And the last one is hunches, okay? Trading by hunches, basically trading by feel as well, okay? So very similar to OPO, trading from other people's opinions and all that. So these are the 20 top mistakes that traders make, okay? So in order to cut away your mistakes, okay, don't always have this list next to you, okay, and check yourself against these 20 most critical reasons why traders lose money, all right? And if you find yourself ticking off any of these checklists, then you got to review your trading method or your trading psychology or your what do you call that, money management systems, right? So I just wanted to share with you this before we get into trading. So to give you a glimpse of the reality of trading, right? So let's move on. Okay, so let's talk about trading for a living. What's the difference between part-time, full-time, and professional trading? Okay, what's the difference? Okay, can part-time traders and full-time traders both become as successful? Yes. Okay, honestly, yes, because it all depends on what time frame and what sort of time you are dedicated into trading. Okay, some people can work with end of day data and just put their trades in the next day to their brokers. Okay, and then basically once their trade is in, they put in their money management stops or whatever profit taking stops, and then they actually have minimal time on the screen to look at the prices because the orders are already there. Okay, so it's really actually there's no difference in terms of the success. Both full-time and part-time traders can be equally successful. Okay, of course, the most important distinction of a full-time trader, if you say you're a full-time trader and and trading is your full-time, you make a living from it. Basically, you put bread on the table, okay, and you pay your bills from your trading profits. Okay, now when you do that, okay, that means your cari makan, your life or your livelihood is solely from trading. Okay, the distinction is very, very different. Okay, so when I moved from part-time trading into full-time trading when I retired, it's a very, very different world in terms of your trading psychology and how you approach trading. All right, but yes, both can be what do you call that, profitable. Okay, you don't necessarily feel that being a part-time trader, you're not fulfilling your what do you call that, your dream to become a trader. A lot of people start part-time and then move on. Okay, in fact, those of you who are seriously thinking of it but not too sure yet, I would encourage you definitely to start part-time, right, and then build your skills, because if you are part-time, you have an income taking care of your daily needs. Okay, you have the time to think, you have the time to learn, you have the time and space to actually make some mistakes. Okay, in full-time trading, you better be ready, because every mistake you make, that means less food on your table, right? Okay, now, so the question is full-time trading better than part-time, right? So I answered that question. Basically, if you treat your trading as a business, okay, and you got what we'll talk about later, the edge and all that, and you exhibit all the behaviors of a successful trader, then professional trader, trading full-time is something for you. Okay, if not, start as a part-time first, okay, and then build your success from there. Okay, I want to talk a very, very important thing, capital requirements, okay? Professional trading is a real business, right? So doing business, you need to have capital, right? It needs to be managed like one, and capital requirement is one very important one, okay? And of course, in terms of trading, it's very different for a part-timer and a full-time basis, the capital requirement, okay? And if you think that the capital requirement, I'm talking about the capital, the put into your trading account, no, okay? In terms of full-time basis, you have to talk about the other costs that you have to take care about, okay? And also the things that you talk about is the other things that a lot of people don't think about is when they talk about trading capital, it's not only the margins that you put with your broker, okay? It's your operational cost as well. What's your screen cost, okay? What's your, okay, maybe some people have a space cost, okay? Your charting software, your live data subscription. These are costs that a lot of people don't think starting off, okay? And a lot of traders, when they first start out as a retail trader, they tend to go El Cheapo on all these things, okay? I want the cheap thing, I want the free thing, okay? But you must understand there's always the trade-off, okay? Free things aren't going to, cut it in certain ways, right? So in terms of charting software, those are costs that you need to input in, okay? And it's part of your capital to start real serious trading, right? And then for full-time traders, do you have the living expenses or reserve fund for 12 to 24 months? Okay, what if your trading strategy don't work or you're tweaking your trading strategy? Can you survive 12 to 24 months? Normally it will take about a year and 2 years to get your act together, right? Can you afford, okay? Do you have the reserves, okay? Or if by the third month you already have trouble already, I think perhaps you have not ready for full-time trading yet, okay? So in terms of capital requirements of full-time trading requires to put not only money in terms of the trading capital, but also for resources and also for a reserve fund in case you're not profitable in the first 2 years, okay? So this is a critical requirement that, you must always put into your calculations. Okay, so that's capital requirements. Okay, and the reason why I want to tell you is because scared money, okay? Scared money and trading for milk money, okay? This one is susu money. You need to buy milk powder with your trading profits. If you need to do that, you are in big trouble. Okay, or your money, scared money, cannot afford to lose one. Okay, I don't know where you got the money from. Okay, I hope you didn't borrow it from the loan shark or whatever. Or you max out your credit cards to try to trade. Okay, so these are this, according to the famed trading psychologists, those who research trading psychology, this particular problem, if you have this particular problem, that means you're trading with scared money and you're trading for milk money that, you cannot afford to lose one. You 100% or 99.99%, you will lose all your money. Okay, this is a trading psychology problem that cannot be solved. Okay, so if you are in that situation, okay, you better reconsider your situation. Okay, perhaps go to the part-time trading first. Have a job by the side. Okay, while you learn. Okay, and collect your capital. Okay, before you actually start real full-time trading. Okay, you must be mentally prepared. The capital thing is a big trading psychology issue, okay? Because if you are fearful, your money, you cannot afford to lose, you cannot have a stop loss, or you cannot walk away from a loss, okay? Then you are in trouble. Because why? In trading, there are things called drawdowns, okay? Equity, your trading equity, although you can go up, it can also come down, okay? And then what we're looking for is actually about 45-degree angle of that thing, but there's ups and downs to the, what do you call that, your balance in your account. Right? And that's the pain part, okay? So if you can't take that pain, okay, you can't handle losing trades, okay, this could be one of the reasons is capitalization, okay? You also can't do proper risk sizing if you don't have enough capital, okay? So seriously, when you look at trading for full-time or trading for a living, this is a very important consideration, okay? Capital, okay? There may be ways to solve that later. I'll talk about that, okay? So you stay with me and I'll maybe have a solution for you, okay? Okay, so in terms of looking at trading, okay, we spoke about methodology, we spoke about having to have a money management strategy and also trading psychology. These are the key 3 building blocks of a trading strategy, right? So let's talk a bit about methodology, okay? But when you come to methodology and you debate methodology, there's so many methodologies in the world, okay? You can use this, and all these things are things I've studied before, and I've a lot of it I've used before as well, right? So you can trade with economic data, you can use candlesticks, Fibonacci, Gann, as well. Wow, so many things, okay? No one trader may have a single what do you call that, or come to a point where everybody agrees on a system, okay? Because all the systems can work, okay? There are other elements that you need to bring in, okay? And one of the elements is regardless of what system you use, I want to recommend you one thing, okay? If you're trading for real, Okay, talking about the approach in trading, okay, which is either you are a discretionary trader or you are a systematic trader. Two types of approach, okay? So basically the discretionary trader, what's a discretionary trader? Okay, the approach is basically entering and exiting trade based on a feel, okay? What do you mean by feel, okay? Okay, basically you look at charts, okay? You say, I look at charts, what do you mean I trade by feel? Okay, I look by charts, I read the news, okay? Hopefully catch some nice snippets of news or some fundamental pieces of news, research on fundamentals. Some go on hot tips and rumors, okay? And some go by hunches, okay? So whether or not you go by some, what do you call that? More like real stuff, okay? Like observing chart patterns or listening to rumors. Basically, when you trade as a discretionary trader, when you put in a trade, well, how you make a decision is you hear in your head the word "I feel." You look at this. This looks like a head and shoulders broken already. Okay, I feel now I can go in already. So every time you catch yourself saying this word "I feel," okay, or you read the news, I feel now good. The news is very good already, or the fundamental looks so good, I feel I can go in now. Okay, hot tips, of course, hot tips. No, so and so say this, okay, I feel this is a great time to go in. When you say "I feel," it's called discretionary, okay? And this decisions made by a trader, okay? So some people say, hey, David, of course, all decisions are made by a trader. Correct, I concur with you, okay? But when you hear this voice in the head tell you, I feel, okay, that means it's personally made by you. And let me differentiate between discretionary and systematic, okay? Systematic or mechanical approaches, you have rules, okay? You have rules to enter, okay? So you can actually have a chart pattern and you have rules for it, okay? So basically you say when it breaks this and it breaks this by this particular point, okay? This is the entry point and this is the exit point, okay? So it's rule-based, it's structured, it's disciplined, okay? And it's non-emotional, okay? So basically what it does is the method, the decisions are made by the method or made by the system. Okay, so very different from the I feel. Okay, so when you have this system, one of the most important thing as a result of having a system is you are able to measure results. Okay, and this is very, very important. If you can measure your results, of course, you say, hey, discretionary trading also you can measure results. Okay, yeah, you can measure the P&L. Okay, but you can actually, whether you can actually measure that that particular system in terms of the signals are good or not, okay, or the method is robust or not, okay, a systematic system will be able to let you measure it much, much better, okay? And by using this method, you're able to know what we call the trading edge, meaning to say that is this method that you're having to trade the markets, does it have an edge? Okay, that means long term, you are definitely going to make money out of this. Okay, or is it just basing on a very short period or a short sample time period? Okay, maybe a very bullish part of the market where you thought the method is very good and you can apply it for long term, but you find out later that it doesn't. Right. So basically, in my recommendation as an approach to your trading, I would highly recommend a mechanical approach. Okay, because you can measure your results, okay, and you can actually tweak certain parts of your methodology, okay, by using things like back testing and forward testing, and to see whether by doing that you can actually improve your system if things don't look good, right? So this is a very important a distinction in terms of discretionary trading and systematic or methodology or mechanical approach to trading, right? Okay, so when you come to data, okay, so we said that in terms of the mechanical or systematic, we can generate a lot of different data to measure the system, okay? Of course, by discretionary, you can still have these numbers, and these are very important numbers to have to evaluate your own trading strategy, okay? So before, ideally, before you even go live with your trading system, trading with real money, you are able to test and measure your system, okay? I would highly recommend that if you can do that, okay? So things like net profit, okay, what are the numbers of winners against losers? What's the percentage of measuring that? What's your average win? Okay, every time you make a profitable trade, what's your average win? Okay, what's your average loss? These are two critical numbers that I will talk about later. Winning percentage and average win, average loss, and especially the ratio between the average win and average loss, okay, which some people call it the win-loss or profit ratio, okay, and what's the average trade? That means the expectation of every trade. Is it a a profit or is it a loss? Okay, largest drawdowns. So for a particular system, what is the drawdown? Okay, that means the curve, okay, from the peak to the trough and then back up above the peak. What is that measure? Okay, so if you have a system that has a very large drawdowns, then your swings in your equity is very violent. Okay, so you want to have actually a system that has a smoother drawdowns. Drawdowns are unavoidable, but smoother drawdowns in terms of the curve, right? Then you measure things like profit factor. Okay, later we'll go in on some of the good measures. What is the percentage time it spends in drawdown? Okay, and what's the average drawdown? So these are very critical measures of a trading system. If you have these numbers with you, then we can go in and say, are we ready to go live, or are we ready to go full-time? Okay, you want to be full-time, then you better have a system that is good. Okay, so let's go in and measure, okay, to say, hey, when can you really want to go full-time? What system can actually make it? Okay, so let's go in and talk about that. Okay, so what are the odds of a success? Okay, so if you decide you want to go full-time, then you better know that you can do it. Okay, so let's see how we measure our system, whether it can go full-time or go to professional trading. Okay, so again, okay, you may say I'm long-winded and Chong-hei, okay, but when it comes to trading, it's all about numbers, okay? So know your statistics. You need to know your statistic, and if you don't know your statistics, basically you're trading blind. You don't know whether 6 months down the road you're still in the market, or 1 year down the road you're still in the market, okay? Because you don't know your odds, okay? So as a professional trader, you need to know your statistics of your system. Okay, and before even actually putting real money, if you can, before ever risking money on it. Okay, so the key thing is find out two numbers. Okay, number one is what is your trading edge? Do you have a trading edge? Okay, the other thing is what is your risk of losing all your capital? Okay, and these are two very important things. Okay, so when you really want to go into full-time trading, I would highly recommend you to have these two numbers. You know what is your edge, and you also know whether your system will fail or not. Okay, so later we'll go in and see how to find out. All right, so these are the three very critical measures. Okay, the first, okay, is this, whether your system can survive in the long term. Okay, and one of the measures is called risk of ruin. Okay, and for professional traders, okay, if you're really trading for a living and trading as a profession, this is one of the key measures. Okay, when it comes to your system. All right, what is the probability, okay, of your system, ruining all the capital? That means losing all your capital. Okay, which on the opposite coin means that whether your system can be profitable in the long run. Okay, and I always have learned this lesson, and this particular picture was from a very old magazine. Futures and Commodities magazine, all right? It was written by Balsara. Okay, you can always go and I have I think a reference to this book. Okay, and let me show you what are risk of ruin. Basically, risk of ruin is measuring, or otherwise called ROR. Okay, it's basically a measure of whether your system can self-destruct or not. Okay, that means the more you trade, the more you are going to lose more and more capital. Okay, and the risk of ruin has a function of two measurements. Okay, the first is the system's probability of success. That means your win ratio. Okay, out of 10 trades or 100 out of 100 trades, how many percent actually win? Okay, the first measure. The second measure is the payoff ratio. Okay, what is payoff ratio? It's basically dividing your average win against your average trade loss. Okay, so if you divide that, you get your payoff ratio. Okay, and the third very important thing is how much the amount of capital you expose to a certain trade. Okay, the fraction of capital exposed. So it's risk of ruin ROR is based on these three particular metrics. Okay, so if you look at a ROR and the ROR is 100%, that means 100% you lose all your capital, you'll be bankrupt in terms of trading. Okay, so if they measure it, okay, 1 is 100%, of course 0 is 0%. Okay, so the closer you get to 0 or multiples, what do you call that? In terms of the number of points away from 0, the better it is. Okay, so if it's 0, of course, it suggests that ruin is impossible. So you can trade this long term. Okay, whereas a 1, 100%, it's going to be ruin. Okay, so if you have a system that's 100%, then you really ought to review your trading system. Okay, in terms of what is wrong with it. Okay, so let me give you a few examples of R&R. Okay, and this is of course from this book called this article called Appreciating Risk of Ruin by Nausel Balsara. Okay, Stock and Commodities magazine. Okay, you can always look up that source. Okay, he wrote a very interesting article that time, and I managed to extract some of this from there. Okay, so basically this is a risk of ruin table showing you the risk of ruin if you're risking 100%. Okay, of course, very foolish lah. Everybody go in and just risk 100% every time they trade, right? Okay, so if you look at this, you have the probability of success against the payoff ratio. Okay, so payoff ratio, if it's a payoff ratio is 1, that means if you make money, you make 1 unit dollars. If you lose money, you lose 1 unit dollar. All right. So if it's 10, payoff ratio is 10, that means every time you make money is 10, every time you lose is 1. Okay. So even if you have a payoff ratio of 10, okay, and you have a probability success of 60%, that means your winning edge is 60%, and that's considered good in trading. Okay, you still have a 40% chance of losing all of your capital. Okay, so that's still a very, very high in terms of the chance of ruin. Okay, so definitely, of course, you should never ever risk 100% of your capital every time you trade. Okay, some people do. Okay, don't be surprised. Some people do. Okay, definitely not advisable. Okay. What about 50%? What if you risk 50% of your money on the trade every time? Okay, how does the numbers look like? Okay, so let's say, for example, if you still take the same probability of success, I mean, you still have a 60% chance of winning, okay, which is pretty good, okay, and then you have a 2-to-1 ratio, okay. Always people say, okay, you have a 2-to-1 ratio, it's good, but you have a 60%, it's still 20.8%. Okay, so this function, although this is good, the 2-to-1 ratio is good, and your win ratio is good, your risk of ruin, because you are putting 50% of your capital at risk every time, you still have a 20 or about 21% risk that you will fail, or this system has a 21% failure rate, okay, to lose all your capital. That's still not very good. Okay, so that conclusion is, if you're risking 50% of your money every time you trade, still not good, okay, in terms of the ROR. Let's move to 25%. Okay, so the numbers will start to change as you don't risk that much money. Okay, that's one of the observations that you will have. Same win percentage, 60%. Okay, and if you have a 4-to-1 win ratio, okay, now you see the numbers going down. Okay, now the numbers are going down to very, very low already. It's a 2.7% already. It's looking quite good already. Okay, but if you have a 2-to-1, what do you call that, win ratio, you're still having about a 4.3% risk of ruin. So still not really that great, you tell me, if you ask me. Okay, so now we go to 10%. Okay, a bit more conservative now. All right, and if you look at that, if you go to 60% win ratio, okay, with 2-to-1, basically your numbers are down to 0 already. That means even if you risk 10% every time, and if you have win percentage of 60 and a 2-to-1 ratio, basically your risk of ruin is 0. That means you more or less your system is very robust. Okay, but of course, if it's just 0.45% win ratio, win percentage, it's only 3.3%, low, but still has a chance. Okay, so you see, as you go down, okay, reducing the amount of the what you call that, capital exposed every time you trade, okay, your numbers will seriously go up. Okay, so what lessons we learn from here is basically every time you trade, okay, you need to put into very important consideration the amount of risk you take on that particular trade. Okay, so if you risk, say for example, anything below 10%, okay, your risk of ruin numbers will improve tremendously. Okay, so of course, in any system, aim for a risk of ruin very close to a very decimal of 0 or 0 if you can get the numbers there. All right, so this is a very important measure. So in conclusion, okay, successful trading is about survival, of course, and good risk management. You may have a high win ratio, but another very important equivalent or very important measure is the payoff ratio. Okay, so always remember, ROR is very important. If you're able to measure your risk of ruin of a system, then you have a lot more confidence in whether your system can survive the long term. All right, so let's move on and talk about, okay, before we go into that, okay, if you are a trading system, when you talk about robustness of a trading system, okay, your rules need to be as simple as possible. Okay, so simplicity always wins against complexity. Okay, so don't think that you have a very complicated system, it's always better. It's not. Okay, so any very complicated system, okay, unless it's run by say automated by algo or robot. Okay, but if you're a human being making decisions, okay, with very complex rules, you tend to fail because your trading psychology in very stressful and or tense situations, and markets are usually in that situation, you will not be able to implement your very complex trading system. Okay, so simplicity, because you need to react to the market conditions, is very, very important. Okay, so it's very easy for you to act. You know the rules very clearly. You don't have 1001 rules you need to comply with before you can make a trade or get out of the market. Okay, you have, simplicity is always more robust. Okay, of course it needs to be logical and rational, and of course it needs to have a positive expectancy. So we're talking about the edge. Okay, the edge is actually expectancy. Right. So trading method, you need to have an edge. Okay. What is positive expectancy? Okay. Another bit of mathematics. Sorry to take you through mathematics this evening, but let's go back to the same variables we spoke about. Okay. The win percentage, the average, what do you call that, winning trade, and the average loss. Okay. So this for you, when you put that into the formula, which I show you now, then you get the expectancy, and needs to be positive. Okay, it needs to be positive, right? So this is the formula. Don't worry, these slides are available on YouTube after you leave. And you can also get this formula expectancy online. Okay, so basically, this you need to plug in this thing to get these 4 answers, right? Plug in the probability of winning trades. Okay, probably plug in the average win, plug in the average loss. Okay, or you can use the this other alternative calculation as well. Okay, I won't read the formula to you, but you can see it on the screen. Okay, so you can use either of that, and if you come up with a positive number after this calculation, okay, then your system has what we call an edge. Okay, because your expectancy is positive. All right. So let's go in and plug in some numbers. Okay, let's take an example over here. All right, so let's assume something. Okay, let's assume your average win, and I just actually take out from one of the trading system. Your average win is 2,000. Okay, and your average loss is 1,235. Okay, and your average win percentage of win is 52%. Okay, what does this mean? That means that 100 times you trade, 52% of time you are profitable. Okay, so plug that thing into the model. Okay, and you get 0.37, which is a positive expectancy. So if you're trading these numbers, you're trading an average win of 2,000, average loss of 1,002, and your percentage win is 52%, then you have a positive expectancy, right? So this is a very important thing. Try your numbers, try to put in your numbers and see, okay, and see whether, if you have your numbers already in your system, plug it in and see whether you have a positive expectancy, right? If you have negative expectancy, every time you trade, you will lose money, right? On average. So this is very important. Whether your system has an edge or not, this is one of the key measures. Right? So I'll take an example from RJ Trading System. Okay, RJ Trading System is actually from his very, very famous book called The Trading Game. I will encourage you to check this guy's book out. Okay, this is basically a book on money management and position sizing. Okay, Ryan Jones, and in his example, he had a trading system. Okay, you can actually test out his trading system, very impressive trading system. Okay, he combined all the 8 results of different commodity and futures markets together, and he got these results. So these are the results. Okay, don't worry about the actual numbers, but I want to show you these key results. Win percentage, 57%. Okay, win-loss ratio, which is 2.8, basically 2860 divided by 1,000 is 2.8. Okay, so when you plug this in, you will get a very, very good number. Okay, and how do you measure whether this is good or not? Okay, so in terms of looking this sidebar here, a break-even system. What is a break-even system? Okay, win-loss 50-50. Okay, you win one time, lose one time. Okay, and when you make money, you make $1, lose $1. Okay, so if you trade this system, I'm sorry, long term, of course, you lose money. Lose money to who? You lose money to your brokers when you pay brokerage. Okay, in the end, you're basically just wasting time. Okay, yeah, just treading water. Nothing will just basically losing brokerage and slippage. Okay, that's a break-even system. A very good system. Okay, a very good system. A lot of people underestimate the figures. Okay, a very good system in terms of a lot of traders, professional traders. you get something like a winning percentage of 40%. No, very, very decent. No, and these are professional traders, okay? And a win-loss ratio of 2, you can hit a target win-loss ratio of 2. That means you make average profit 2 times more than your loss. This is a very, very good system, okay? We're not talking good system, we're talking about very good system, okay? And when you look at the RJ's trading result, okay, he's got a winning percentage of 50%, and this is above 57. 57 is above 50, and a win-loss ratio of 2.5, and this is called almost holy grail, okay? This is like, if you can find this, it's something that you won't share with anybody, okay? So anybody who says that he's got a holy grail system and is selling an e-book on the internet, you got to doubt his what do you call that, credibility, right? Because when you have this, you basically set for life already, okay? You don't have, unless you really hate trading and then say, I want to sell trading systems, okay? This is the holy grail, right? So if you look at RJ's trading system, it's actually holy grail, no? So I bet you better go and check out RJ's trading system and see whether you can find some good diamonds from there, okay? Okay, this I wanted to show you some results based on that. Okay, so in that sense, when you talk about numbers, you need to do back testing and forward testing, right? So if you want to put some systems to life, hopefully you've done this process of back testing, basically going through back data and running through your strategy and generating the what do you call that, the trading metrics, okay? So forward testing is, you can do it on paper trading as well. Basically, it's simulated actual trading, right? But not with live money, okay? Or with very minimum risk onto your capital. You can do this forward test to further confirm whether the trading system is effective or not, okay? So these are very important considerations. And this one of the considerations I spoke about on September, the 20th September, when we talk about algo trading, okay, and how to design algo trading systems, okay. Of course, backtesting is the backbone of algo system, and part of those steps in terms of designing an algo system. All right, so let's move on. Okay, so this one, of course, again, is numbers. Keep a trading log. Okay, for those of you who are keeping a trading log, congratulations. That means you are very basically you have your finger on on your numbers. Okay, so of course these are the things you need to have in your trading log. Date, time entry, what are the contracts, long or short, entry price, stop price. All these, of course, can be gotten from your statements. Okay, so every time you have a broker statements, you can basically put it into your Excel spreadsheet, right? And of course, if you can also talk about your mental state at that particular time you put your trade in or exit the trade, your mental state, that'll be fantastic. Okay, if you have the discipline to keep a trading log, you have a very good trading psychology fundamentals in place already, right? So if one of the things I like to challenge traders, a lot of people come and say, hey, David, teach me how to trade and all that. I say, no problem. You want to learn how to trade? Are you serious about it? Okay. The first thing I'll always let them do is I'll give them 5 years data and ask them to backtest and give me the results, okay? And a lot of times it's manual backtest, okay? So I test people and their conviction on the interest to trade by doing that, okay? And a lot of people fail, okay? A lot of people are not willing to put in the work to backtest, okay? So, but those who actually do it are today very gratefully, they are doing very, very well. Okay, so take 50 to 100 trades and then crunch numbers and get all those numbers we spoke about just now, right? Net profit, etc., all those things, right? And how is the measure of good systems? Okay, this one I will not spend too much time there. We spoke about it. Okay, you can refer to this particular table. What is a good measure? Okay, win-loss ratio above 2 and all that. Just use it as a reference to see whether your system is good or not. Okay, so in terms of equity curve, okay, the equity curve ideally is a 45-degree. You will have your ups and downs, but it's trending on a 45-degree. Okay, Sharpe ratio, Sortino ratio, all these are measures and metrics. So make sure that your system measures up to some of these good measurements. Okay, so risk of ruin, of course, is one of those measures as well. Okay, I want to go in and talk about a summary of this money management guidelines for trading. Okay, first thing to remember is always preserve capital. That's your key to survival and also your prosperity. Okay, always trade with the stop. Okay, if you don't know already, you probably is an ex-trader already. Always trade with stops. These are your seat belts. Okay, it's like driving a fast car, but you have a seat belt for your safety. Okay, risk no more than 5% if you can, right? Because that will reduce your risk of ruin. That will improve your risk of ruin numbers. Calculate, of course, your win-loss ratio. Try to achieve 2 and above if you can. Okay, and position sizing. Okay, increase your profits as you make money. Okay, and decrease sizes if you lose money, and not the other way around. Okay, a lot of people increase their size as they lose money in order to chase back the past losses. Okay, but that's the wrong strategy, right, in terms of sustainable trading. Okay, so in terms of I share a quote with you here. Who are the winners or losers? Winner or in risk management. Okay, so this is actually a quote from Victor Niederhofer. Okay, his book on the education of speculator. Basically, he worked with George Soros. Okay, and he said that in his time with George Soros, he never hear George Soros talking about his winning trades. He always talks about his losing trades. Okay, and learning about from the losers. Okay, so conversely, those who are new in trading and retail traders, they always talk about the big winnings, right, and never talk about their losses, right? So they only boast about the big winnings. Okay, so it's the opposite. Okay, it's the opposite. Okay. So in terms of looking at the 5 fundamental truths of trading, very critical. Okay, if you understand these 5 things, okay, you will be doing well. Okay, this is actually from a book from Mark Douglas, Trading in the Zone. Okay, and I fully believe all these 5 principles. Okay, the first one is this: when you're trading, anything can happen. Okay, anything and everything will happen. Okay, and the second thing is you do not need to know what is going to happen and the order is going to happen, okay, to make money. Okay, so we accept the first reality. Anything can happen. Okay, and the second thing is you do not need to know what's going to happen next in order to make money. Okay, these are the 5 fundamentals. Okay, some people cannot accept the second one already. Okay, the third one is basically there's a random distribution between wins and losses for a given set of variables that define an edge. Okay, very long word. What does that mean? Okay, firstly, the next trade, you don't know what's going to happen. Okay, is it going to be profitable? Can be. Will it be a loss? It possibly be as well, right? But you don't need to know. Why you don't need to know? Because you have an edge. Okay, and the thing you don't know is out of that 10 trades, when the winners will come first. Let's say, for example, your trading system is 60% correct. Okay, that means in the next 10 trades, okay, 6 out of those 10 trades will be profit, right? But you don't know when that 6 one will come first. How's the combination? Is it going to be a loss before the win-win-win comes? Or is it going to be a win-win, loss, win-win? You don't know. Okay, so this third point, basically, there is a random distribution. Okay, when you calculate your edge, there is a random. You don't know when it's going to come, right? So the edge is nothing other than an indication that in terms of the number of things that happen or the probability of things happening, you will come out, okay, better at the end of that sequence. Okay, so an edge is nothing more than an indication of a higher probability of one thing happening over the other. So if you have an edge, it means, let's say, for example, your system is 60% profitable. Okay, you have and your what do you call that? Your profit ratio is good. You have an edge. Okay, so you don't know when those sequence of winning trades will come. Neither do you know the sequence of losses. Okay, but you know at the end of say 10 to 20 trades, you will come out positive in terms of your profits. Okay, that's what it means. The 5 fundamentals of trading. And last one, every moment in the market is unique. Okay, whatever has passed will not again repeat itself. Okay, of course the technical analysts will say no, that's not one of our beliefs. Okay, basically they believe that the markets have a tendency to repeat. Okay, but every moment in the market is actually unique. Okay, every single moment after it passed already is a different moment already. So if you can accept that every single time you go in, okay, and you had a loss the last couple of times, okay, doesn't mean the next moment you're going to have a losing trade. Okay, so you can always remember this. If you can remember this, you can always pull the trigger again, right? You can always enter the trade because you know anything can happen and the sequence is not for you to dictate. Okay, so these are fantastic fundamentals. Actually, to me, this is like the holy grail advice in terms of trading, right? And the next one is what? Next one is trading psychology. Basically, the key to trading psychology is just get out of your own way. Most of the time, it's you creating the problems, okay, for yourself, right? So in terms of trading psychology, a mindset. Let us just share these few things with you. Okay, for successful traders, the first thing is take responsibility for your own decisions. Okay, trade with the flow. Okay, always be together with the market. Okay, understand that the market is not your enemy. Okay, it doesn't. It's definitely not. I mean, it doesn't care who is trading in it. Okay, and it doesn't care whether you're trading in it or not. Okay, so if you're not in and it became a very good trade, it doesn't mean that he's torturing. No, it's just because you didn't pull the trigger, right? The third one is trade without fear. Okay, one of the things about mindset is trade without fear. Okay, that's why if you have money that you cannot afford to lose or capital that you cannot afford to lose, you are unlikely to succeed because you're trading with fear. Right? So understand your possibility and the edge. We spoke a lot about this. Okay, and always see markets objectively. Okay, markets are not against you. They can nothing against you. Okay, it's everybody's in terms when they go in the market is fair and square. Right? So it is important to have an edge. So after these very important principles in terms of critical lessons, so we ask this question, are you ready for full-time? Okay, so what are the checklists? Okay, number one, you have to ask yourself, are you able to replace your income from trading while still on a full-time job? Let's say, for example, while you are having trading as a part-time, okay, and you are able to replace your full-time job with your part-time income from trading, okay, so more or less you're ready. Okay, number two is you know your edge of your trading. Okay, answer the question, does your trading has an edge? Okay, good. If got, okay, have you built up 12 months reserve fund if you want to go full time? Okay, you want to cari makan from trading. Okay, 12-month reserve fund got. Have you got the savings? Okay, got. Fantastic. Okay, this one is for your expenses. Okay, because as I said, when you move from part-time, when you're profitable to full-time, when the total trading psychology changes. Okay, you experience it as I have experienced 3 years before when I retired. Okay, you will definitely experience it. Okay, and I'll tell you a story afterwards about this. Okay, do you have reserve funds separate from your trading capital? Okay, your funds are for other things, operational costs, trading systems, platforms. Do you have that? Okay, yeah. Have you got a safety margin? Okay, yeah. Having this safety margin in terms of funds and reserves is very important. Okay, and of course, have a backup plan. Now, what if you fail in full-time trading? Okay, where are you going to go? You're not going to follow Alex Kern's method, right? You're not going to take your life, right? Yeah. So you need to have a backup plan. Okay, which actually comes to me to this story of Bill Williams. Okay. If you guys have followed me in my sessions on webinar, you know that I learned a lot from Bill Williams, one of my sort of like guru, you can say, my master, which I learned trading from him 20 or years ago. And Bill Williams said in the story when he first came up to do full-time trading, okay, he's so interested in, they are actually therapists, okay, they are trained in psychology and all that, they are therapists. And he and his wife, they went out to do full-time trading. And then when they do they were doing well actually part-time, right? And then when they really went into full-time trading, okay, he said that the first 1 year he lost a lot of money. He lost a lot of money, so much money that he lost confidence in himself and his trading system. Okay, so he was about to quit, right? And one day he sat down with his wife and said, dear, this thing about full-time trading is my dream. It's something that I love, and it really doesn't seem to be working out. Okay, what should I do and all that? So the wife basically told him, okay, think rationally, all right? We are all trained psychologists. We used to have a profession, okay? So the wife told him, okay, you still have money, right? You still have some reserves, okay? Trade for another 1 year without worrying about what's going to happen, okay? Worst come to worst, okay, you go back and be your psychologist and your therapist. Okay, that's the worst that can happen, right? You don't have to take your life, all right? So with that advice and support from the spouse, okay, Bill Williams managed to become a very successful trader and eventually also spread his word about his trading methodology all around the world. Okay, and I could learn from him as well, and he was already very successful then. Right. So this is a story even from a guy that, he has become so successful. Eventually, he went through a very tough time as well when he transitioned from trading part-time into full-time trading. Okay. You can read his story if you Google Bill Williams' story on trading, right? So if you're ready, you have all the checklists checked, then you're basically ready already, okay? And you can also consider a few things, okay? But first, we talk about these professional trading setups, what you need to have, okay? Of course, you need your trading execution screens, you need to have the platforms, your charting software, your strategy, backtesting, forward testing software if you have, okay? Of course, you need a brokerage account to execute your trades. Connectivity. Do you have connectivity? Do you have market data access? These are very important things. And then your workplace, okay, set up your trading space, a nice and comfortable and quiet place, your PC and monitor setups as well, okay? So these are the things that you need to have, right? And in terms of looking at careers, okay, let's talk about careers in trading, okay? If you want to trade full-time as a career, you have a few choices, okay? The first is Bursa Malaysia, of course, the local participant program. This has been a long-term, a very long program since the exchange started. Basically, the local participants program is you are a professional derivatives trader, okay? You trade your own account, okay? You basically is a self-employed trader already. Okay, before, of course, moving into this LP status or getting a membership with the exchange, you need to have already have those checklists. This is how we did one, right? So basically, you're signing up as a very official, because by signing up with Bursa Malaysia on their local participants scheme, you get what do you call that? Basically, exchange and clearing fee incentives, right? So if you're an active trader, trade above 1,000 contracts per month or more, okay, you will have a very good, very low clearing fees, okay? And for traders in LPs also, they're able to what you call be able to do their very short term. They can trade off their trades for free, okay, if they cover their trades at the same price, right? So that's the LP. Okay, what other what do you call that careers are available? What if you love trading and you don't have the capital and you want to learn? Okay, so the other way is this. Okay, okay, proprietary trading firms. Okay, so there are actually proprietary trading firms in Malaysia. Okay, some of you already know that you can become a trader with a prop trading firm. Okay, so what basically a prop trading firm provides is it provides risk capital for you. So if you're a good trader and you have proven some record, but you don't have the capital, okay, you don't have to wait like me. I've waited like some how many years? Some 40 over years to learn the skills and also to what do you call, save up the capital for my trading. Okay, if you like trading and you love trading, you can take this route called the prop trading route. Okay, you become a prop trader, right? And basically, the prop trading firm provides you the capital to trade. Okay, of course, you have to be good. Okay, you have to prove yourself, right? So traders are basically provided with trading platforms. You have trading platforms. Okay, you have hopefully tested strategies. Okay, from the prop firm, they have trading strategies as well to fast track you to be successful traders. Okay, you have training, right? You have mentoring, okay, which are very important things. You have all this great stuff. And you have one very important thing, which is close supervision by a team of experienced traders. Okay, so prop trading firms, okay, and there are a couple of prop trading firms currently being set up in Malaysia as well. So they will be hiring traders as well, right? And they give you this very important advantage of close supervision. Okay, so sometimes in terms of risk management and all that, personally, if you do it on your own money, you may have a problem. Okay, but in terms of a prop trading firm, they have very strict rules in terms of risk management and positions and all that. Okay, so that could be a very important advantage in terms of your success in trading. Okay, and of course your incentives. If you are good in trading, you get a percentage share of the trading profits. Okay, so for you guys, one of the ways the younger people or those of you who may not have the capital yet, but you have the trading skills, or you've been honing your trading skills, or you want to get into trading, okay, prop trading firms is one of the ways to do that. Okay, and the good news is if you're really interested in prop trading, let me know. Okay, if you want to be a prop trader, okay, send me your details, okay, to this email here, email@xmodeustrrading.com, okay. Put in your resume, send me your details, tell me about your working and trading experience, okay. If you have trading results and track record, okay, let me know, okay. We will evaluate you and we can basically place you into positions of prop trading. I have friends who are starting up prop firms. Okay, I also will be having a prop firm coming up. Okay, so if you think you have the card to be one, send us your details and we can evaluate and we can talk about a career being a prop trader. All right. So we now go into question and answers. I'm going to pass the session back to Shane, and we are going to take questions from you. So do shoot your questions, and I'm really glad to be handling all your questions. Back to you, Shane.
All right. Thank you so much, David. I think we have all learned what we need to prepare ourselves mentally, technologically, and how we can become a full-time trader. So if you are game to be a full-time trader, you type 1. Okay. If you're not yet ready, you type 2. Okay, let me know in the comment to see how many of you here have done self-evaluation to see if you're ready and fit to be a full-time trader. Okay, so majority of you put 2. That means you still see some gaps from where you are right now to where you want to be. Okay, we have a couple who write 1. Fantastic.
Congratulations.
Okay, cool. Yes. So if any questions, you may write in the Q&A box. Okay.
Yes.
Now the first question is, how does one know that one capital is undercapitalized? Is there a minimum amount? And what is your recommended minimum amount for a beginner?
Okay, so when you consider capital, it all there are different facets to it. Okay, so if you consider capital, of course, number 1 is your skill. Okay, the skill to be able to handle capital. Okay, so let's say, for example, you got enough cash somewhere, okay, and then say, hey, how much should I allocate to it? Okay, so it depends on what contracts you're trading, okay, and whether you're trading day trading or overnight trading. Okay, so in terms of trading futures, for a living, overnight trades will attract more in terms of the capital. Okay, so let's say, for example, you're trading palm oil, the CPO, FCPO overnight, right? So the commitment for funds in that terms of holding positions, 2-3 lots, it's a palm oil is not a cheap contract, right? It's a rather large contract in terms of the capital requirements. Okay, so if you're day trading, of course, you don't take overnight risk. Okay, another function of capital is your overnight risk. Okay, so the thing is, if you don't take overnight risk, then your intraday risk is less, so your stop losses are less, so your percentage in terms of losses on a day basis quite limited, right? So you can trade more position, okay, but then in terms of overnight risk, you don't have that. So for overnight risk, then you need to have a larger buffer, which means to have a larger capital. Okay, so in terms of how to determine, okay, whether what capital to have is depends on your size that you're trading. Okay, so let's say, for example, you're trading palm oil, okay, and palm oil, you say, on a daily basis, the risk, say, for example, per contract, your risk is 3,000. Okay, so what does that mean? 3,000, let's say, for example, 3,000 per trade, and you don't risk more than 5%. Okay, so per contract, you need to have at least 20,000 ringgit to trade that kind of risk. Okay, so if you're trading sizes like 5 lots, then you would need to have 100,000. Okay, so that's how you gauge your trading in terms of the risk that you're taking against the capital that you have. Okay, but ultimately is your trading psychology. Okay, some people may be able to trade 100,000 account. Some people are able to trade $1 million account, okay, without the psychological stress. Okay, but everybody has a certain limit, right? So you give him 100 million, it's maybe a different story, in terms of his trading style and all that. Okay, so it's a function of your ability in terms of trading psychology, and of course budget, of course. Okay, so but if your budget, you have already some reasonable size, right, it will depends on what contracts you trade as well. Okay, some other contracts, let's say, for example, you're trading the micros on CME. The micros in CME, in terms of the requirements per contracts, are lower, right? So you may have a smaller, budget to start with to trade a smaller contract. Okay, so in terms of those who are just starting out to trade futures or slowly building account size, you may start with a smaller account first, right, and build that account size larger, or save the money to build that particular capital. Okay, but most important, it must be capital that you can afford to risk. Okay, because trading is a speculative venture, and there are ups and downs. Okay, but of course, you have the edge, then you're able to pull through all those down or the drawdowns. All right, I hope that answers the question.
All right, thank you so much, David. The next question is by Kin Seng. Do full-time traders need to pay income tax?
Good question. Of course, I can't give advice on tax. Okay? Anything that is deemed by the LH, the income tax as something full-time, you are liable to be taxed. Although capital gains on futures trading normally is not taxable. Okay, so I won't attempt to try to answer a question which better leave to tax consultants. Okay, but if you do have a systematic way of trading and all that, you could likely be taxable. Okay, but you're successful, you make millions, what the heck? Give some of the tax to help people, citizens of Malaysia. Okay, but do consult your tax consultant on this particular matter. Okay, I don't think I can give online tax advice here.
All right. Yeah, the next question is, what's the difference between trading stocks and trading futures full-time?
Mainly leverage. Okay, so in trading stocks, you may or may not have leverage. That means you will have trade one-to-one. Okay, unless you are able to get some margins. Okay, if your margin account, then it's probably 2 times. Okay, so the key thing is leverage, right? Of course, you have this scheme. You've heard of proprietary day traders in Bursa Malaysia. They would probably have a better margin in terms of the leverage. Okay, so an example is they may have 3 times, 5 times, 6 times, depending on their ability to trade, right? So in terms of futures, then your leverage is between 5 to 20 times normally, right? So the difference is usually in the leverage, and that's where it either amplifies your returns and of course amplifies your losses as well. So I love trading futures because of the leverage. Okay, so compared to me against trading stocks, normally stocks I'll invest. Okay, so I don't really look at it on the short term, but when in trading, then I'll trade futures. Okay, well, that's my own style in that sense, right? So the main difference is the leverage. Stocks don't really offer you much leverage, whereas futures offers you leverage. Back to you, Shane.
All right, thanks, David. So what is a let me see. The next question is asking about crypto. Is crypto futures trading legal in Malaysia? Will I get questions by authorities if I want to cash out my profits?
The question. Nice question, though. As far as I know, okay, as far as I know, a lot of you guys that trade cryptos are having accounts outside the country, which you. So it's not entirely, I think, not entirely something that it's totally, how should I say, totally legit. But I guess it's not legal to trade it here, right? It's illegal to operate a exchange if not licensed with the SC, right? So when you're trading offshore exchanges, just have to be careful where your safety of funds is, right? So my best advice is, although it doesn't seem to be something illegal to trade, this we advise your safety of funds when you deposit funds with external parties. Yeah. But of
I think
course,
we have a few licensed crypto exchanges here by SC.
Yeah, so you're going to trade, of course, if you trade with the licensed exchanges, is purely legit.
All right, the next question is by Amir. For those who can't bring the volume as a LP, local participant, and not joining a prop firm, how does one justify full-time trading as an official business?
Okay, I'm not an LP. Okay, so I don't have a particular need for the incentives. Being an LP offers always offset a trade-off between what you save in terms of the brokerage and what you have to pay as a professional trader in terms of your tax. Okay, so you're gonna make sense if you're very active and the savings from your slippage and commissions really is way better than what you pay the authorities. Okay, then of course it makes sense to sign up as an LP, right? You of course Bursa has the retail trader incentive program as well that give you some discounts on your brokerages. Okay, that's something you could do as well. Okay, that's called the R-tip. You could talk to your brokers about that. They'll give you some discounts. But for me, you basically, if you negotiate a rate with your broker, which is, and these days the rates are very competitive, I must say, right? And if you're able to cover your brokerage within the bid offer, if it's one tick, if you're able to cover one tick, you're basically in quite good in terms of the commission, right? Unless you are, say you are very you trade a very scalper and all that. Okay, you're a scalper, you trade lots of volume every single day. Then being what do you call that, a local would have a very big advantage for you. You can also your trades, if you trade against the same price back, you can actually have no brokerage on that. Okay, so the advantages of LP, you have to offset with of course the tax, because it's now defined as a full-time trader, a professional trader, you're subject to tax. Okay, so that's my best recommendation in terms of trying to balance the decision. Okay, between. But I trade professionally. I'm not a RT, I'm not a LP, and I'm happily making some decent profits for myself. So no problem. Back to you, Shane.
Okay. Now, would you be able to share with us, like, if you want to become a full-time traders with a prop firm, what is the market standard or market practice for a remuneration package? Is it like, what is the salary like? And then what is the market practice for the profit sharing like?
It all varies depending on the prop firm's practices. Okay, some pay base salary, some don't. Okay, base salaries are not, of course, base salaries are never the main thing when you go to a prop trading, right? You go into a prop, become a prop trader, you're expected to perform and make a lot of money, right? You make a lot of money from your profit sharing and not from the base salary. Okay, so some prop firms don't pay base salary at all, right? So it depends on your skill when you enter the prop trade. So if you're able to immediately land on the track and then start running already and become profitable already, right? You really don't need the base salary, because all your upside is from the profit sharing, right? But of course, if you're a learning trader, okay, you're a beginning trader, and you haven't really gotten your bearings together, right? You may need to have a base salary. So you need to check out those prop firms that provide you a base salary for you to sort of pull through your expenses, okay, while you're generating those profits, right? So I would say in terms of base salaries, they are not very high, okay? It's for sustenance only, okay? And that's not the main thing for prop firms, okay? In fact, a lot of prop firms don't pay base salary.
Okay, thank you so much. So just I mentioned that if to become an RP, right? To participate in RP, we must check with the broker, right? Retail
LP,
traders.
Retail trader. Retail trader incentive program.
Yeah, that one we check with the broker, right?
Yeah.
To sign up for LP, we have to talk to Bursa, am I right?
Yeah, talk to Bursa. They have periodic intakes. Okay, of course you need to have a broker as well, right? So you can also talk to your broker, say you're interested, become an LP, work with the broker, and you can do the application. You need to go for a course, I think a short course of 2 weekends or something, I forgot already, and get assessed, then go through an interview, and then you're good. Yeah.
Right. Now, just now you mentioned about a trading edge. What is a healthy, good win to loss ratio, in your opinion, to have a good trading edge?
Okay. The win-loss ratio, which you're basically talking the average profit against the average loss. Okay. Most of the quoted one you saw just now, I quoted you a very good system. If it's 2 times the loss, okay, it's very good. But sometimes it can be less than that. It can be 1.5 times against 1. Okay, but you have a higher win percentage. Let's say, for example, you have a 60% win percentage. In the long term, when you input those figures into the expectation, the E, you will still get a positive figure. So if you get a positive figure, okay, something like 0.3, 0.4 and above, okay, you're in very good grounds already. Your numbers are really very nice already, right? So very, very simple. Later, I think the video will go up again, or if maybe I'll just Shin, allow me to just scroll back to answer this question. Okay, just
sure.
Scroll back. Okay, go to this particular formula, and okay, this where is it? Okay, so you go back and you input this. Okay, very good system. You input these two figures, the winning percentage and the win-loss ratio too. Okay, and you see what is the expectation, right? This is a very good system. So you benchmark against that particular figure and you will be able to get it. Okay. I can actually calculate here, but I encourage you to calculate, do it as an exercise. Okay, take these numbers from the very good system and put it in, or even put in the almost holy grails thing, the 50% and the 2.5 into the expectation figure, and see what number you get, right? And that will be your benchmark for what is a very good system expectancy and what is a good. So use this yellow box here to try to gauge what is a system number, right? When it comes to, in terms of these two metrics. Okay, I hope that's play around with the figure. Okay, use this and input, and then you see what your own numbers against these benchmarks.
All right. So if any more questions, you may write in the Q&A box. Okay, we will take it. In the meantime, may I share my screen first?
Yes.
While we see if there are more questions here. Okay, so as usual, we are going to do a post-webinar survey. So we want to encourage you to give us a survey to let us know, to give us your feedback, to let us know whether this session has gone, has really given you the right value. Please help to answer our survey. This survey will be launched after this webinar, or will also be sent to you via email. So we will pick 10 lucky respondents who answer our survey question as to give you a Touch and Go e-wallet reload pin worth 30 ringgit. Okay, so we'll reach out to the winners within 2 weeks. I am guessing that, you know, many of you here are already a past recipient. Okay, so we have given out, I think probably this is the, probably over 100 participants. Okay, so yeah, probably some of you here would have got it. So please help us to do our survey. We'll pick 10 lucky respondents. All right. So not only you earn, not only you learn from this webinar, you also earn from this webinar. Okay. The next campaign I want to promote is this Trade FM70 campaign. Okay, we have 2 Trade FM70 campaigns here. The first one is a trading competition where we compete to see who has the best profit. Okay, we'll compete to see who has the best volume. Okay, so you don't need to be profitable yet. Okay, so if the largest volume you have, then you will stand to win some cash prizes from Bursa Malaysia Derivatives. So we have 3 categories here, and the one that you can participate is the retail trading competition. Okay, so what you need to do is to trade this futures contract that is FM70, and the more volumes you trade, then the higher probability that you can take home some of the cash prizes. Okay, first prize we have 4,000 ringgit. To the 5th prize we have 500 ringgit. So this campaign starts from 1st November to about 31st December. So this is the second round of the campaign. But you must trade FM70. But if you don't want to trade FM70, it is also all right. You can also participate in a FM70 quiz challenge, whereby the quiz will be posted on the Bursa Malaysia social media account. What I need to do is just to answer the quiz, and we'll give away 100 ringgit Touch and Go e-wallet reload pin to 24 winners. So the more information about this campaign, you can go to www.bursamarketplace.com/FM70. So this is the contract. It's a equity futures contract. For you to get, it's a mini futures contract for you to get exposure to the Bursa Mid 70 index. Of course, we also have the derivatives e-learning series, DEL. This is the, I think David also participated in this, correct?
Yes.
Yeah, you may check out, if you want to learn more about derivative, you may go to sidc.com.my to find out more about derivative e-learning series. You know, you can complete this series and gain knowledge more comprehensively about futures trading. Okay. Looks like no more questions. So let me promote the next webinar. So next webinar is titled Gold Price Drops, Profit from Trading Gold Futures. So this session, we hardly talk about any futures contract. We talk about how to become a full-time traders. But the next session, we will focus on this enhanced gold futures contract called FGLD. So gold price drop, if you're concerned, then you will be able to hedge or profit from a bear market in gold, all right, through this through trading gold futures contract. So it's happening on the 6th December. This is our last futures webinar in this year. So it's a Tuesday. It's 8:30 to 10 p.m. So here is the registration link. So let me just put it in the chat box in a short while for you to register. All right. So I give you the link in a short while, yeah? Okay, any other questions so far? Okay, if no question, then we will call it a day for this session. So thank you everybody for joining this session, Trading Futures as a Living. I hope that you have gained the knowledge, gained the ideas, gained what are the things that you need to do to prepare yourself mentally, technologically, in terms of skills-wise, to become a full-time traders. So we will see you in the next webinar that we're just giving you in the chat group. Okay, do register for that if you want to learn about futures contract for gold. So have a good evening, everybody.
Bye-bye. All the best.
Thanks. Thanks, David.